Hi everybody, welcome back to my YouTube channel. I thought I'd hop on here quick because I wanted to show you a potential trade setup and what I look for when I'm doing higher time frame analysis and just simply going over my trades. I think I'm going to start doing more trade recaps, more trade analysis videos, just because I figure that would help out more and you'll be able to see the trades I'm taking, my mindset when I'm taking a trade, and simply just getting in the habit of documenting your trades, doing higher time frame analysis, and just seeing it, repetition rate. So I'll try to make this video short. We are gonna hop into the charts right now. Cheers. Okay. So I like to start with the dollar. I do a 15-minute recap and a daily recap, but I go through the 4-hour, 1-hour, 15-minute time frame and the daily time frame. But I will just start on the 15-minute just for time's sake. Yesterday we came into this 15-minute FVG. I noticed there was a daily volume imbalance. Now here's the key is you're not picking tops and bottoms. So even though the daily volume balance was reached, it is just a magnet and it could go higher. So we also have our other buy side targets. My buy side targets for today was the consequent encroachment of the daily wick here and the daily high, which we'll probably be hitting today. I mean, we are so close. So we'll probably surpass that daily high, and then of course my next one would probably be this consequent encroachment of this wick and the high of this wick. So I like to have kind of like a directional bias on the DXY because the DXY plays into all the markets, including the ES, which is what we trade. So understanding that we're likely to go higher on the DXY is giving us confluence for the ES to go lower, right? So here we go. 15-minute time frame for the ES. I wanted to point out though, I do go from 1 day all the way down to let's move this one actually. So this is why I took the trade. Anyways, I'll keep it over here. I like to start at the daily time frame. You can see we've been kind of trading around in this range. And then this week we came down, took out this low, came back up. We had a daily fair value gap here, so I extended it in time. We also have this daily fair value gap and a daily volume imbalance, which are potential targets. But I extended it out in time. But since we've been ranging, and as you can see, Wednesday has been our biggest day, but it's just been ranging, I am looking for short-term targets, not super big days like this day. We're just kind of like looking for short-term targets, getting our 5 pips, getting our 5 handles, and running away. So we see this, we see that it came off the daily fair value gap again. We ranged again today, came off the daily fair value gap, couldn't break this daily high. And then I noticed this morning we couldn't break this daily high right here. And because we could not break this daily high, it kind of gave me some insight to possibly want to go lower, especially because we have the new week opening gap right here, and we traded off this new week opening gap already today. I would like to see it get down into this consequent encroachment of this wick right here, and potential consequent encroachment of the new week opening gap. Maybe take out this daily low, but considering it's Friday, I don't know if we'll be getting a lot of movement. And then I go down to the 4-hour. 4-hour, I kind of just see there's not too much for the 4-hour. For the ES, 1 hour. Now, the interesting thing is this 1 hour fair value gap. As you can see, we traded into it yesterday, came down, couldn't get past it, close above it. Remember, the wicks do damage, the bodies tell the story. So we come back into this 1 hour fair value gap today at 4 in the morning, traded into it. Look at how the bodies are respecting this 1 hour fair value gap. That right away is giving me signs that we are going to sell. That we're going to sell today, possibly close in this opening range gap, possibly come down all the way to this consequent encroachment of the daily wick, which would be my daily target. Anything more than that, great. If it doesn't get down there, that's fine. But I would like to see this be reached. 15 minutes. Now, remember, we can toggle from the electronic trading hours to the regular trading hours, and that's what I've done here when I had this opening range gap. They're gray on my thing. So it comes up to the 1 hour fair value gap. Where could it potentially go? We could potentially fill in the opening range gap, we could fill in the new week opening gap, and we could come down to the consequent encroachment of the new week opening gap, also into the consequent encroachment of the daily wick. So as you can see, we've been trading lower. After I have my higher time frame analysis, we have the 1 hour fair value gap. We didn't take up the old high. We had the opening range gap. We wanted to see the consequent encroachment of the daily wick potentially reached, and the DXY is going higher. So we have higher time frame analysis right there. Then I'll go into my 5-minute chart and 1-minute charts, and that's where I'd look for entries. Let's see if I can. Yes, so we go into our 1-minute charts and look for entries. As you can see, we've already done the higher time frame analysis, and we're looking for sells. We had a short-term buy-side liquidity run here, displacement run, comes back up into this 1-minute fair value gap, and that's our entry right there. That is classic 2022 model entry. Displacement, fair value gap, looking for an area of liquidity or inefficiency, and then look at how we're coming down, traded off this fair value gap into the new week opening gap high, come back down. Look, we've reached the consequent encroachment of the new week opening gap, and of course my final target would be this consequent encroachment of the daily wick. Not to say it's not going to go lower, but that would be my final target. And yes, I just wanted to show you that with higher time frame analysis, these entries are easy because we know that we don't want to see it go higher. We came back in here, 956. I like to take trades after 942, so we wait for this to kind of fizzle out. Displacement comes back up into this fair value gap. We trade into it, and then look at how beautifully we break down. We have a little bit of back and forth here, and then all the way down to this new week opening gap high. That alone is 13 handles. And our goal is to get 5 handles. So remember, when you're doing your trades too, you always want to make sure that the trade has a minimum of 10 potential handles. Of course, in this scenario, we have a potential of 20 handles. But it's Friday, and we don't want to do anything too crazy, so having this higher time frame analysis, having this fair value gap, this entry model, break of structure, displacement, fair value gap. Easy, especially when you have the higher time frame analysis to go with it. So that is all for me today. I will also post some pictures on my Twitter if you guys want. If pictures helps you learn better. I find that when I take a screenshot, make a couple notes on the screen, take a picture, that helps me learn so much better, and I can always go back, see what actually went down in the charts, and it just helps me become a better trader. So if it would help you, let me know. It will be on my Twitter, and yeah, that is everything. I hope you guys have a wonderful weekend. I hope you had an amazing week trading, and I will see you all next week. Perfect. Bye now.